All right, welcome back to another episode of the Black Bullion Show for goldandsilvertoday.com. Check that website out, everybody. So today, gold and silver are back out of the dumps on top of a weaker dollar. But wait, just can't say that yet because as I hit record, I noticed that gold and silver prices started to drop. So we'll talk about that a little bit as well. But we'll go over what was behind that initial move upwards and what else kept the dollar down today. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so as you guys can see here, both gold and silver prices started trending up even during the early morning hours. Then after the producer price index numbers came out around 8:30, it was pretty much off to the races. So, yes, producers experienced inflation here in the US during the month of September. But before we get into that, we have to talk about what's happening here to the right side of both of the charts, which is both prices are currently at the moment dropping. And what we're seeing right now is that the VIX is starting to heighten a bit more as it was a little bit lower earlier today. So I'm going to be monitoring that today, but it looks like even some equities are being hit, to the downside. I took a look at Amazon, I took a look at Google, and they're both coming down as well. But as of right now, let's take a look at some of the data from producers. And, as far as producers are concerned, not only did they, did the index rise, but it rose more than what was expected, as you can see from the headline here. So let's get into exactly the details behind this. So in September, services rose 0.4% after increasing 0.5% in August. A 3.9% jump in hotel and motel accommodation was a major driver in the rise in prices of services last month. There were also increases in the cost of hardware, building materials and supplies, transportation, and hospital and patient care. Whole food prices rebounded 1.2% after 3 straight monthly declines. Wholesale gasoline prices fell 2.8%. Prices for goods accelerated 0.4% after edging up 0.1%. Goods prices were driven by a 14.7% surge in prices for iron and steel scrap. All right, so, we'll see how these numbers progress in the coming months, because to me, it seems like the Roni's cases do impact the services sector. As you can see here, cases in the US are beginning to tick up, kind of slowly but surely. But what else contributed to today's dollar weakness? Well, we can blame a little bit of that on this guy right here. This is the British pound. And it looks like it really starts to take off at the open of pre-market hours. Now, keep in mind that this graph is timed in UTC, which is about 4 hours ahead of Eastern Standard Time. If you're taking a look at that and wondering, what are you talking about, Black Bullion? That is not, that move there did not happen during, the open at pre-market trading. So what exactly kicked this off? Well, pound sterling recovers lost ground against euro and dollar after UK walks back from a deadline, but fisheries showdown looms large. So let's see what's going on here. The British pound has recovered ground lost against a host of major currencies earlier in the week on fresh news headlines confirming the UK won't walk away from trade negotiations as their self-imposed deadline races into view. The government confirmed on Wednesday they would stay at the negotiating table, relieving concerns that talks would break down due to a lack of progress. The move confirms the government believes progress has been made and that a deal is likely, an outcome that is seen by markets to be positive for sterling exchange rates. Here's a quote here. Sentiment is building in the market, the UK may not terminate negotiations this week with the EU. The pound is outperforming across the board this morning and holding in well. On elevated chances, talks will continue beyond mid-October, says Neil Jones. However, some traders have expressed surprise at the market's reaction, as there were few political commentators or market analysts who seriously believed the UK would crash negotiations this week, and a deadline of late November or even early December always looked more realistic. At the very least, the move in sterling should serve as a reminder that intraday volatility is likely to be elevated over coming days, if not weeks, as automated trading algorithms primed to react to news headlines go to work. So we had a pretty straightforward day in the monetary metals. Nice upward movement in response to inflation, which is refreshing to see. Now, obviously, we're going to have to be monitoring the pound, but, as far as the dollar is concerned, at least right now, the VIX is, kind of a little bit on a move, and it's been bringing gold and silver prices down. I even just saw this note here as I was reading this that, it's not here anymore, but basically this, Dow Jones was down 150 points. So, things are definitely, topsy-turvy today. Yesterday was a pretty straightforward day, but today I thought was going to be straightforward, and now it looks like things are starting to reverse course a little bit. But guys, that was your Wednesday. Let me know what you think in the comments section below. Thanks again for watching. Please hit the like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.